right here. Just wanted to go over some then versus now mortgage payment rates because I've had some conversations with people about housing affordability and what's it like now versus what was it like 30 years ago, 20 years ago, in the past. And I'm sorry about the notifications. I should have turned them off before I went live, but let's just jump right into it quick. So I'm going to look at a loan amount of $250. Now, depending on how much money you put down on a house, right? This might be a $300,000 house. You may be doing a VA loan with no money down because you're a veteran, and it might be a $250 house. But we're going to talk about the loan amount being $250 and what that means for your payments. So if you purchased this house in 1980, the average mortgage rate for good credit in June was 12.71%. And so if your mortgage was $250,000, that meant your mortgage principal and interest payment was $2,709. If you bought that same house or got that same loan in 2000, that interest rate in June was about 8.29% for a payment of $1,885. I bought a house in that kind of environment and that kind of mortgage rate, which is why I was comparing what it was like then versus now. Today, or at the end of 2020, in June, that interest rate was 3.16%, meaning the same payment for that loan amount of $250,000 at 3.16% is $1,076 for your mortgage principal and interest. So the same loan, the same mortgage payment is less than half of what it was, almost a third of what it was in 1980 for the same cost house. Now then, that was a much more luxurious house than it is now. Right now, that's a first-time buyer rate, but the principal and interest is much, much lower, and that's what I'm trying to get across here. Now, you still have taxes and insurance on that house at today's taxes and insurance rates, and so now you're probably looking at about $335 on top of that $1,076 for that mortgage amount. But compared to renting, that's not astronomical because we have these amazing rates, and you're, building equity in that house. You're paying yourself versus paying a landlord, especially at this low interest rate. That money is so cheap for you to start building equity. So it's a really good time to buy. However, the inventory is really low. It's really competitive. There's not a lot to choose from right now going into 2021. So you have to be really prepared for that and be really competitive. I've got other videos on that. But let me just talk about what this means at a much higher price point, just to kind of put it in perspective. So that principal and interest payment at 12.71% in 1980 for a $550,000 mortgage, which is, now we're talking into jumbo loans and those things, but that would have been $5,960 plus taxes and insurance. Now, today, that $550, if you're getting a 3.16 principal and interest payment, is only $2,367. Now, granted, you're going to have taxes and insurance on that of nearly $1,000 a month, but you are getting the same principal and interest payment now for a $550 house, less, I should say, than what you were on a $250 house back in 1980. And not much more for that $550 house now than what it was in 2000. So really the affordability because of interest rates is there, even on a much higher priced house. So if you've got questions, just another quick note that I wrote here is you will have mortgage insurance if you're putting less than 20% down. So that's another added cost that's not on my board. just, this is some food for thought for buying a home right now and maybe moving up to your next home, especially if you bought in the 80s or in 2000 at the much higher interest rates. So